Hey everybody, Gary with Basecamp Trading. Let's take a look at how the markets were playing out this morning during the London session. We came in the morning and we were looking at our higher time frame charts, and this is the importance of looking left. When you come in the morning to start trading, you need to know what happened in the sessions before. And you can see that yesterday, starting with the FOMC release, crude oil just started dropping like a rock, and it dropped through yesterday afternoon and then all through the Asian session. Crude was down almost $2 full by the time we came in to trade. So we know that, hey, we've made a very extended run. We are definitely in a bearish mode. Chart's still very bearish, but we've moved a long way. And so at that point in time, we're thinking, okay, we need to be very conservative with our trades, pick and choose carefully, because consolidation is very likely when you've made this kind of move. And you don't want to get caught in the chop, and at the same time, you don't want to get caught chasing a market either. Chasing extended markets can definitely be damaging to your account. And you can see that you had the same thing in the ES as well. FOMC release, and then the ES just dropped through the afternoon and through most of the morning. And so, all the markets were very extended, and it's really, really important to keep your finger off the mouse. You want to be very careful when you have those types of conditions. You know that pullbacks, consolidation are high probabilities, and you don't want to get caught in the chop. And like I said, you don't want to get caught chasing a market. So that being said, we were still following the charts and we were being very patient, and we actually did get a good setup right in here. The markets had been consolidating a little bit, actually made a pullback, and we got a nice setup on our Renko chart. Right here, you can see that the market had been kind of just chopping sideways, and then we got this slow line zero touch. The slow line is the slow line on MQ momentum. It had made a reset back here to the zero line. The zero line on MQ momentum is the line that the histograms move above and below, and we got a nice reset right here. We're in the bearish mode still. Price was below the smooth 50, below the cloud. The 50 SMA was below both the smooth 50 and the cloud. 34 EMA had crossed back down below the 50 SMA, and then we got this slow line zero touch coming out of compression. We had well-defined support right here, and we were anticipating, we've been down here several times, we were anticipating a break with a nice setup. And as it turns out, we got a nice little run down. It was only good for 3 targets or $300 per contract, and it was actually the only trade we took for the morning. Again, we were being very conservative, being very patient. We knew we were in a very extended market. I mean, that was the movement starting yesterday. And you can see the market had just really, really dropped, and we were in a very extended market. But we had a nice legitimate setup right here. We're able to take a trade, pick up $300 per contract, and that's okay. Some mornings are like that. But again, it's very important. Look left to see what happened in the markets before you came in, and it can help give you guidance on what to do for that particular session.